Good morning, everyone. On behalf of Systematics Group, we welcome you to the 1Q FY26 earnings conference call of NALCO Limited. We are joined today by Shri Vijay Pratap Singh, CMD and Director Commercial, and other functional directors of the company, along with Mr. Bharat Sahu, Company Secretary, discuss the company's financial and operational performance for the first quarter of FY26. I would like to thank the management for giving us an opportunity to host this call. At the end of the presentation, we will open the floor for questions and participants can raise their hands if they wish to ask a question. Now I request Mr. Bharat Sahu for his opening remarks and introduction of the management team. Over to you, sir.
Thank you, ma'am. Greetings from National Aluminium Company Limited to all our esteemed investors. We had a board meeting yesterday to consider and approve the Q1 25-26 results. The result is already out. And thank you, Systematics Group, for arranging and hosting this post-earning conference call. Before we start, let me have the privilege of introducing our management team, the functional directors. Anti-clockwise, sitting extreme is Sri Srimant Panda, our ED Finance. Sitting next to him is our Sri Abhay Kumar Behuria, Director Finance. Next to him is Sri Jagdish Arora, Director of Projects and Technicals. Sitting in the middle is our CMD and Director Commercial Additional Charge, Sri Vijendra Pratap Singh sir. Sitting next to him is Sri Pankaj Kumar Sharma, Director Production. And sitting just next to me is our Director HR, Dr. Tapas Kumar Patnaik. And before taking any further time, first we will have a brief presentation about the Q1 results, and then we'll invite our esteemed participants to come forward with their questions. Now I'll request my colleague, Mr. Subhap Purohit, to have the presentation, please.
Thank you, sir. Good morning to all. Welcome you all to this earning conference call for quarter one. So the results of Q1 has been published yesterday, and it's another quarter of strong results shown by the company. Now we will go through the presentation. The agenda of the presentation is similar to the earlier presentation. We'll look at the company at brief, then we'll go to the physical performance, the financial highlights, then we'll touch upon a little bit on the industry's outlook, and we'll see our business highlights of the company and the ESG performance of the company as well. So NALCO is an Maharashtra CPSE, Government of India holding is 51.28%. Integrated bauxite, aluminium, power core complex in the country, and it is global leader in producing bauxite and alumina at the lowest cost. We are the lowest cost producer since about 7 to 8 years. We have been continuously rated as the lowest cost producer in bauxite and alumina. Our assets, bauxite assets are at bauxites and refining assets are at Damanjodi. It's 7.5 million we are producing right now bauxite as per the requirement of our refinery. Our refinery capacity is currently 2.1 million. Then our smelter and CPP assets are at Angul, again in the state of Odisha. We have also recently started operating our Utkal E and E coal mines in January of 2025. Our combined capacity of 4 million tons started. Then we have a dedicated facility at Vizag port for export of alumina and also import and metal and import of products. We are also having 4 wind power plants of total 198 megawatt capacity at Rajasthan, Maharashtra and Andhra Pradesh. Now coming to our physical performance in quarter one, we have been operating at almost about 100% capacity, but still we are improving our productivity and still registering higher production quarter by quarter. So if you see, in case of bauxite, we have achieved 6.6% growth against corresponding quarter last year. In case of alumina hydrate, there has been a significant jump of 35% against quarter one due to a base effect. Then in case of metal, we have achieved 3% growth, and power also 6% growth. If you come to sales also, in sales also in case of alumina, we have achieved significant jump. This is partly due to base effect as Q1 sales were a bit less. And in case of metal also, we have achieved growth of 9%. Here I would like to mention also that in case of domestic sales of metal and alumina, in both cases, we have achieved highest ever sales for Q1 of any particular year. And if you see the run rate also, we are exceeding our past year production. So in case of alumina, we are running at a run rate of around 23 lakh ton. Aluminium, we are running at 4.6 to 4.7, and bauxite also around 76 lakh ton. Now coming to the financial performance. In the last quarter, the Q4 of 24-25, it was a record-breaking performance of the company. The last quarter and the last financial year as well. In Q1 also, the company has shown very strong performance in its results. We can see there is growth of 33% in the revenue, and also the PAT has registered growth of 77% against the corresponding quarter of last year. The company has also declared dividends of rupees 2.5 per share in its latest board meeting. Now coming to the industry outlook, the LME price, if you see, there was a downfall in April 25 when LME price fall down to $2,380 per ton because of the tariff announcement by US President. Since then, the LME price has recovered and it has reached to about $2,560 right now. The LME price going ahead are likely to be impacted by the tariff developments are still uncertain, though the 90 days period has elapsed, but still there are lots of negotiations to go, and the tariff rates are far from over. So the developments, the LME price also will depend on the latest developments on the tariff of US announcements. Then there are new starts in alumina refining and smelting capacities, primarily in Indonesia and India. Then of course, there is rising oil prices and increase in US dollar index recently. The LME price normally moves inversely with the rising oil prices and with the rising dollar index actually. The LME price moves indexly. So the LME prices will be impacted, and there is disruptions in the bauxite supply also. Guinea has cancelled some licenses recently for bauxite mining. In Ghana also there is one lease where the license was cancelled. So, upon developments in these sectors, the LME price will also be impacted. Now, coming to the global GDP growth, in earlier outlook in April 2025, IMF has projected 2.8% growth, but this time in July 2025, the tariff-related developments have settled a bit as per IMF, and they have projected a growth of 3%. Which augurs well for the aluminium sector as well, because aluminium consumption is almost proportional or to the growth of the country as well as the globe. So we can see in July 2025, the IMF has projected that there will be 3% growth in for the year 2025 and 3.1% growth for the year 26. Coming to the alumina scenario, the alumina supply was a bit of downside on the last year, but the supply has improved recently, and we can see the difference between production and consumption. It is coming a little bit on the surplus side. The alumina prices are also moving accordingly. Coming to the aluminium sector, in aluminium sector there is growth. There is little bit of deficit on the, if you see the quarter-on-quarter basis, and on the year estimation for the annual also, there are little bit of deficit side. So the aluminium sector is also dependent on the latest capacity additions. We all know that the capacity at China is capped at 45 million ton currently. So currently China is almost about reaching the 43-44 million ton. So the supply side will be limited to that. So in the H2 of this year and the next future years, the LME prices are likely to stay strong. Now, if you look at the domestic scenario, the domestic, our country is still the fastest growing economy in the world. Recently, RBI has said that for this year we are projecting at 6.5% growth. For the next year, 6.7% growth. The country is aiming to be Viksit Bharat by the year 2047. So to reach a 30 trillion economy by 2047, the growth rate needs to be more than 7%, which again augurs well for the aluminium industry in the country. If we see the aluminium consumption pattern, currently the electrical sector is having the largest chunk in the aluminium consumption. It is having around 48% share, and transportation and building and construction sector comes next. So as the country's GDP growth rises, there will be definitely growth in this sector. And recently, our Ministry of Mines has published a recent document of aluminium, where they have predicted aluminium consumption will reach about 8.5 million ton by 2030. So there is lots of scope for improvement of demand in the country. And if you see the Indian aluminium scenario also, the growth rate is about 9%. The aluminium consumption growth is around 9%, and also there is growth in the production growth. So the sector is a booming sector in the country, and the primary producers are also adding capacities to their plants. So this is going ahead well in the future. If we come back to NALCO, NALCO's strategy is it's an integrated operation. We are integrated with our bauxite mines, our alumina refining capacity, our power plant. Then also we are having our own captive coal blocks. The company is a zero debt company which gives leverage to fund our upcoming projects, our smelter and power projects, which will require a huge investment. So the zero debt position will help the company in good funding. We are also having raw material security in case of caustic soda. We are having a JV company with GSEL, which is supplying caustic soda to the company. Then our refinery capacity is going ahead. The smelter capacity also is on the pre-project stages at the moment. If you see our expansion plans currently going ahead, the bauxite mines we are currently running at 7.5 million tons, and we have already signed the lease deed for Pottangi bauxite mines, which will be operated by this year end or by Q1 of next year. So our capacity will increase by 3.5 million tons. Then we are going ahead with our upstream refinery expansion, which will increase the capacity by 1 million tons. The mechanical completion is targeted by this year, this financial year end. And the execution are currently on fast track mode. We have achieved around 74 to 75% progress, physical progress in this refinery expansion. For aluminium smelter and captive power plant, these are at the pre-project stages, and the plants are likely to become by financial year 30. Now coming to the environment part, the company is recognized for its works in the environment management. Our bauxite mines are rated as 5-star mines recently. We are operating 2 bauxite mines leases, Central and North Block and South Block at Panchpatmali mines. Both these bauxite mines have been recently rated as 5-star rating. We are putting equally emphasis on plantation, waste utilization, advanced pollution control measures, and biodiversity protections. We are also certified with all the international management certification like ISO 14001, ISO 50001, ISO 9001, and like. And also we are operating already. I have told that we are operating 190 megawatt wind power plant. We are also utilizing our rooftop solar places. Currently, the capacity is 1020 kilowatt power, and we have planned to add 7 megawatts rooftop solar in the future. In the business, we are also equally responsible to the society we are working in. We have identified important sectors where we are working. The company is working at Damanjodi and Angul. Damanjodi is one of the most tribal resided population. So we are focusing on education where we have some flagship schemes like Indradhanush, where we are sponsoring students, tribal students mostly, to reputed residential schools. We have also a scheme of NALCO Ki Ladli, which is in line with Government of India's Beti Bachao Beti Padhao movement, where we are providing financial assistance to the girls of BPL families. In case of healthcare, we are operating mobile healthcare units. 8 numbers of mobile health units are in operation currently at Ankur and Damanjodi and also Patandi, where we are serving to people of 250 peripheral villages. And we are serving more than 1 lakh patients annually. Also, we are operating one OPD facility at Ankur, where we are serving 18,000 patients annually. For women empowerment, we are helping self-help groups like Sakha Foundation for earning support, for their livelihood support. Then there are lots of works on peripheral development, sanitation. Also, we have adopted the Puri Jagannath Temple and surrounding areas development works. So these are all the areas where we are working as per our social obligations. Our corporate governance, the company is a Government of India company. So we are maintaining all our statutory requirements. There are 10 board level committees. We are having 17 core policies and guidelines. We have been rated as very good in the financial year 24-25. Also, we are being recognized for our fair treatment to investors, our dividend policies, and transparency in our reportings. So, thank you all. My presentation is over now.
Thank you. Sauji.
Yes, ma'am, we have already made a brief presentation on the Q1 as well as the different activities of the company. Now we may allow our esteemed participants to come forward with their questions to the management, please.
Thank you, sir. We now open the floor for questions. Anybody who wishes to ask a question can indicate that by raising the hand icon button. So till then, I'll proceed with a couple of questions from my side. So first question would be the status of the alumina refinery, and what is the status, what is the progress, and when are we now expecting the commissioning to happen? And post that, what is likely the ramp up plan, and what can be the expected volumes post commissioning in FY 27 and 28?
As far as refinery is concerned, first of all, a very good morning to all, to you and everyone connected here. Very good morning to all, and congratulations to all for the wonderful performance of NALCO in Q1. As far as your question is concerned, for fifth stream refinery expansion, whatever commitment we have given earlier, that we will be starting the commissioning. All mechanical jobs will be completed maybe by March, and we will try to start all commissioning thing after that, and try to start the production by June 26. That is the commitment we have given earlier also, and we stand by it. The progress in the site is good. All the packages are working well. So when this refinery comes, maybe we start the commissioning in production in June 26. So next financial year, we are hoping we will be producing at least 50% of the total capacity, because initially the production will be less, maybe around 5 lakh to 6 lakhs. It is a 10 lakh capacity line. We will be producing around 5 lakhs next year, next financial year, that is 26-27. After that, it will go to the rated capacity of 10 lakhs.
And sir, what is the number that you can see from the existing alumina? Like you were earlier, we are seeing growth in alumina sales. So from the existing one, what kind of capacity utilization are you expecting on the existing capacity?
Existing capacity, almost we are overutilizing. Our production capacity of alumina is 22.5, around 22 lakhs or 22.5. This year we are planning to do more than that. Maybe 23 lakhs we will be doing. So we will be doing 100% of the rated capacity of the existing line, more than 100%.
Understood, sir. Thank you. We'll take the questions now. We have first question from Amit Murarka from Axis. Amit, please go ahead with your question.
Yeah, hi. Thanks for the hosting the call and the opportunity to ask a question. So, on alumina, generally, like we have been reading that the U.S., Russia are engaging for de-escalation of the current situation in Ukraine, and that could prompt the removal of the export kind of restrictions on Russian alumina. So how do you read the situation? What's your expectation of Russian alumina coming back to the market? Because I believe that could kind of that could create maybe an over supply situation. So just wanted some view on that.
Russian, as far as Russian, you are talking about Russian alumina or aluminium?
Yeah, like alumina as well. So
Alumina.
both rather, but yeah, like
I don't think Russia में कोई excess of alumina is there. Of course, aluminium is there. Aluminium which they were sending to Europe. Europe is already has imposed the sanctions on Russia. So Russian aluminium is not able to go into the European market. And with the Indian Prime Minister signing a free trade agreement with UK, a lot of opportunities are there with Indian aluminium industries to go into the UK market, because UK market is again market where there are a lot of potential for increase in EVs, solar panels and other where usage of aluminium will be there. So that will be a boost for Indian aluminium industry as far as UK is concerned. As far as US tariffs are concerned, again, that is a concern area. US tariff increased to around 50% from 25%. But our aluminium, which is especially from NALCO, we are not exporting any of the aluminium as of now. We are our all aluminium is getting consumed in the domestic market. So NALCO will not be affected by that. Of course, Vedanta was exporting aluminium to USA. Yes. So that may come down if the tariffs is going to remain at the 50% level. But still, the demand is there in US also. So they might go in taking aluminium with the higher prices also.
all right. So specifically on Russian supplies, like how much supply would have been impacted of aluminum? Let's say if you have any number in your mind.
Russian supplies of
Aluminum in the global markets.
Russian supply of aluminium to the global market. I don't think I have the figure right now. We'll have to check what amount of aluminium Russia is exporting.
Aluminium. Russia is what he is asking is alumina. Alumina, Russia does not switch to aluminium.
Aluminium. He wants to know how much aluminium Russia is exporting.
So aluminium, they have around 1.5 million ton, 1.3 total 4 million. They were not producing it. They have reduced it to just 500,000 ton. They had curtailed. So, and they are not the lowest cost of producers. The lowest cost of producers are EGA or this Emirate Global and Bahrain. They will be the first sufferers. This aluminium trade, anything which is coming down from America, they are the most supplier to America. They were supplying 100% to America. So they will be the first sufferers, Bahrain and EGA. This is Dubai-based company.
And just secondly, on the coal supplies of your captive coal mining, I think you mentioned that the 4 million ton has started. So how much would you have produced in Q1 from the captive mines?
Q1 almost at the rated capacity we are producing as far as our targets are there, and this year we will be doing around 4 million ton we will be completing.
Okay. So during monsoon, then you don't anticipate any issue around with coal supplies, right? I think in earlier years we have
No,
seen
no, that is
some.
not there. That is not there. No supply disruptions are there. We have a sufficient stock of coals in our power plants and in mines also. Mines also we are having sufficient stocks. During monsoon, some interruptions in the production is there. Mines production is there, but the dispatches, the transportation from mines to our power plant, that is going as per requirement because we have sufficient stock in the mines.
Sure. Thank you so much. I'll come back later in the queue then.
Okay, thank you.
Thank you. We'll take the next question from Karthikeya. Karthikeya, please unmute yourself and go ahead with your question.
Hi, am I audible?
Yes, you're audible.
Yeah,
Please go
thank
ahead.
you for the opportunity, sir. So I actually missed a couple of points from the starting. So I just wanted to understand what are the timelines for the new bauxite and alumina, bauxite mine and the alumina refinery, and like what's the cost of production in the alumina refinery we are expecting?
As far as bauxite mines is concerned, we are planning to already tender is out for MDO and we are planning to start the mine somewhere maybe February, March. Latest by June we are planning, but we are early with our all dates. Maybe latest by May, June we'll be starting the bauxite mines, Potangi mines, and alumina refinery fish stream. As I already said, we are planning to start the commercial production from maybe June 26 onwards. As far as cost is concerned, cost of the alumina produced in this new our new fish stream refinery expansion, that will be almost similar to the cost which we are producing now. Because of course interest is not there. We are not taken any loan for that. Depreciation will be loaded, but that will be made offset by the technology. In this, the technology is a better technology where the caustic soda consumption will be on the lower side, manpower will be on the lower side, overall manpower, because here in a single line we will be producing around 10 lakh tons. Now with 4 lines at present we are producing 20 lakh tons. So that advantage of the volume will be getting with a lesser manpower, because manpower is the most costly thing, which is our fixed cost as far as fixed cost is concerned. So cost will be almost similar kind of as far as what we are incurring now as far as alumina is concerned.
Okay, sir. And just I wanted to know what was the alumina realization for this quarter?
Alumina realization for this quarter was around 35,000 average realization. It was around $400. $416 average.
Okay, sir. And sir, just another question, like what drove the other expenses for this quarter, as the other expenses were quite high. So I just wanted to understand.
Other expenses, of course, what you are telling is 707 crore is on the higher side. इसमें I think RPO obligation is on the higher side. Na? You can just deliberate on that. RPO, my director production or maybe my ED finance, we had some RPO obligations as far as renewable power is concerned, which costed us around 70 to 75 crores. That was the additional cost which we paid because the norms, government norms has changed. We have to have 30% of.
Basically, our project is basically so we were earlier having our RPO obligation of around 3% of our electricity consumed. But now, due to the Ministry of Power guidelines for year 24-25, we are bound to have obligation of around 29.4% for the year 24-25 and 33% for the year 25-26. So in that connection, we have purchased this e-certs for around 75 crores for the year 24-25. That has increased the cost.
And some और भी कुछ होगा ना? For some that 70 crore was that.
75
crore. And what is the other?
There is an increase little bit in repair maintenance and the coal transport, captive coal, which was 7.2 lakh in the earlier. Now this quarter it is 9.89 lakh. So in our presentation of accounts, the transportation of coal is captured in the other expenses, not in power and fuel. So that also has added to around 10 to 12 crore rupees. So these are the major things, and little bit of in CSR expenses and RPO obligation. Then general administrative expenses increased by around 8 crores. Huh? No, that is in interest. Not in financing. And due to higher volume movement of alumina from refinery to smelter, there is an increase in transportation cost also, and a higher export of alumina also. That has increased selling distribution expenses.
Okay, sir. Okay, sir. Thank you. Thank you so much.
Thank you.
Inland freight cost is in fact 12 crore, and because of there was a little estimation change in last accounting.
Thank you. We'll take the next question from Aditya Velikar. Please go ahead.
Yeah, thank you. Am I audible?
Yes, you're audible,
Yes, yes.
Aditya. Please go ahead.
Yeah, so just on the fifth stream of alumina refinery, sir, what kind of means in the last call you have guided on volumes of 5 lakh ton from that in FY27. So we are keeping that guidance unchanged, correct?
Yes, yes. In FY27, we will be aiming for 5 lakh tons from that, because if we are able to start in June, that much volume we will be getting.
Yeah, 9 months.
9 months will be there.
3 quarters.
It is a 10 lakh capacity. So 3 quarters, minimum 5 lakhs we should get.
Just related to that, so once the plant stabilizes, what kind of utilization can we expect post the full ramp up?
Utilization, actually, initially, if we start in June, initially some utilization will be on the lower side, but slowly, maybe within next 6 months, we'll be trying to take it to the rated capacity of 10 lakh tons. It will take maybe 3, 4, 5, 6 months. But since it is only a chemical plant, chemical process plant, so it will not take a lot of time. That's why we are taking 5 lakh tons for financial year 27.
Understood, sir. Just on few numbers, in the last call, we have given alumina sales volume guidance of 12.8 lakh tons, out of which 12.3 are exports. So those numbers are also unchanged, right?
This year you are talking for this year?
Yeah,
No?
26, FY26.
This year that will increase. Our exports will increase. Whatever we have done last year we have done around kitna shipment. If we talk in terms of shipment, 36 shipment. This year we are planning for maybe 41 or 42 shipments.
42.
That will increase by maybe
5 shipments.
5 shipments. So 5 shipments around 1 lakh or 1.5 lakh tons.
So what will be
Because we are
total
increasing the volume, overall production volume will increase.
what will be that, sir? Total production volume guidance for this year and
Last
sales
year we
volume?
have done, last year calcined alumina we have done around 20.7. It was around 20.7. This year we have planned for 22.5. But we are aiming we will be achieving around 23. So maybe around 2 or 2.5 lakh tons more of production will be there. So in domestic market, we are also increasing our presence. Last year we have sold around 40,000 in the domestic market. This year we are planning we will be selling around maybe 1 lakh or 1,20,000 in the domestic market, and the rest will go to the exports. So export maybe around 1 lakh or 1,50,000 will increase.
Okay, so total sales volume will be 12.8 lakhs.
It will be around more than 12.5 lakhs, 1.5 or 12.8 lakhs.
Understood. Sir, my last question is on that brownfield smelter of 0.5 million ton. Any progress on the DPR? In the last call, we said that we can file a revised DPR.
As far as brownfield expansion of smelter is concerned, already DPR preparation activities we have started. For DPR preparation, we have to have a consultant. Already appointment of consultant, we are going ahead with that. Within maybe next 2 months or 3 months, 2 months we'll be having consultant, 2-3 months, and he will be there for preparing the DPR. We are planning next maybe 7-8 months, we will be ready with the DPR to take it to the board for the approval. That is the timeline?
Yeah.
Our director project is here. He will further clarify it.
For this this month or this financial year, we'll complete all the DPR preparation and all the activities. And one good thing is that land acquisition, which was held up, that has taken shape, and we have completed all the formalities of land acquisition, and now the final stage of land acquisition is taking place. So which will be completing in another 4 to 6 months, and by this time our all the preparation would be ready. So next financial year we'll start the tendering process and onboarding the parties.
Understood, sir. Thanks a lot. I'll get back in the queue.
Thank you.
Thank you. We'll take the next question from Shrikant Hemant. Please go ahead.
Yeah, hi everyone. Can you hear me?
Yes,
Oh,
yes,
yes,
you're
yes.
audible. Please
Morning.
go ahead.
Yeah, hi. This is Shrikant from HSBC. Thanks for the opportunity to ask questions. 3 questions for the time being. I'd like to take them one by one. So first one is, how much of alumina sales in this quarter were on a spot basis and how much were under long-term contracts?
Whatever we have sold in export market, every month one shipment is going for long term and the rest is going on spot. On an average, 4 shipments per month we are doing exports.
Okay, understood. My second question is on pricing. So for long-term contracts, how is pricing determined? Is it linked to LME aluminum prices?
Yes, it is linked to the LME prices. In that, some percentage is decided. On that percentage, it is decided. We do a tender,
Understood.
and on that tender basis, whoever the tender is giving the maximum percentage on the LME, that is order is given on that.
Okay, that's very clear. And third, what is management's outlook for alumina and aluminum cost of production? And can you just remind us about the cost of production in Q1?
20,000. As far as cost of production is concerned, I will request my director.
So far the cost of production of alumina is concerned, and our cost of production is varying around 20 to 21,000. This is the total cost. So far the cost of production of alumina is concerned, so our cost of production is varying between 20,000 to 21,000, and out of that is 60% is our variable cost, and balance is fixed.
Okay, and what's the outlook for this year?
Pardon?
What is the outlook for this year?
It will be almost
It will
same,
be
similar kind.
Similar kind. We may, because of our techno-economic performance very good, we expect reduction in our costs because our performance parameter has improved well. The key consumables, caustic soda, the other parameter, we have a great control over that. So we expect that our cost will come down at the end of the year.
Okay, this was very helpful. I've got a couple more questions, but I'll come back later. Thank you.
Thank you.
Thank you. We'll take the next question from Saket Kapoor. Saket, please unmute yourself and go ahead.
Thank you for the opportunity. I hope I'm audible.
Saket, your voice is a little distant. Can you come closer to the mic?
Yeah. Now, am I audible, sir?
Yes, it's much better.
Yes.
Go ahead.
Namaskar to the entire team, and thank you for the elaborate discussion we are having, sir, and we hope for the continuity. Sir, on the value-added product, if you could just throw some light, what is our roadmap going ahead? and how will value-added sales will contribute? I think so. Some investment in the Angul Park was also envisaged earlier. So where are we? What are we going to invest? When are we going to see value-added contributing to the top line and bottom line? If you could just give us the roadmap.
As far as value-added product is concerned, our focus now is increasing the production of wire rods, because wire rod we are producing only around 1 lakh tons per year yearly. So we are trying to get one new wire rod mill, so that our whatever ingots we are selling in the market, that we will be able to convert into wire rods. That is one target we are taking. Already DPR has been made earlier for that. We are revising the cost estimate and going in for tendering. So whole activity may take around 2 years for the mill to come. And next is the foil sector, the aluminum foil. In that area also we are trying to have some kind of presence, where we are going in for appointing one consultant who will be suggesting us what kind of foils to be made, what will be the market and all that. And very small investment is required in that. Maybe around 150 to 200 crores of investment is required. So these are the two areas as far as metal is concerned, where we are targeting next 2 years or 3 years, 2.5 years, we should have presence, increasing our wire rods and foil segment from our roll product units. And even roll product units, we are going to have one annealing furnace which is coming in the March. So roll product units may, on an average, we are producing 2,000 tons per month. That will increase to 3,000 tons per month from March onwards. So that area also will give more value-added products from roll product units. As far as alumina is concerned, there are the two areas, that is special grade alumina, fused alumina. These are the areas where value-added we can make. We are exploring the market for that. What kind of market is there? The market is there for that. We'll be going in for maybe some kind of conversion or setting up our own units. That is also in there in our mind, to how to go in for that.
So how much have we outlined for this money? Firstly, the wire rod part, 2 years timeline which you have said. How much we will be spending on the same, and what would be its revenue contribution, sir, as on today market prices?
As far as wire rods is concerned, we get a premium of around 10,000 in wire rods. If we see the contribution difference is around maybe 5,000 to 6,000, because we take the conversion cost into account. Rolled products we get a premium of around 30 to 35,000 in the range of, depending on the product. But contribution, again, there is I think contribution must be around, kitna hoga contribution uska? I think it must be around 6,000 to 7,000 contribution as far as rolled product is concerned. So contribution is there in both rolled product and wire rods. And more importantly is that because if you are selling ingots, we are heavily dependent on the LME. So if you want to insulate ourselves from the LME, the fluctuations of the LME, and get the premium in the market, it is very important that we go in for increasing the volumes of wire rods, rolled products, and also going into the foil markets. Foil market again has a very good contribution margin.
So my question was, what is the capex we are doing to for the wire rod segment? For aluminum foil, you mentioned 150.
Capex, as far as capex of the wire rod mill is concerned, it is around in between 200 to 300 crore for a capacity of 1 lakh ton mill. For setting a foil plant, again it is a very low capex plant, around maybe 50 crores or 60 crores for a maybe 1,000 ton monthly capacity plant. Depends on the capacity what we are setting. So wire rod will cost around maybe 250 to 300 crores. That is the capex as far as wire rod is concerned.
And last point, sir, on the alumina realization. So what are the current spot market realizations, and for this quarter and the ensuing quarter, at what prices have we contracted our shipment? If you could just give some color on that.
As far as current spot prices are concerned, that is averaging around 400. This first quarter we got around 416 was the average. because some last quarter का कुछ balance था इस quarter में आया है shipment. That order was of the higher rate. But whatever spot prices currently we are getting is somewhere around $400. And we are expecting that in the coming quarters also that will remain somewhere in between $400 to $450.
Right, sir. Thank you, sir. I will join the queue, and all the best to the team. Dhanyavad.
Thank you. Thank you.
Thank you. We'll take the next question from Pallav Agarwal. Pallav, please go ahead.
Yeah, good morning, sir. So I had a question on how the aluminum physical premiums have been moving. So is it more linked to MJP, or since we sell a majority of our products in the domestic market, so we should be probably commanding a better premium compared to our peers?
We're talking about the premiums in the metal sector, no?
Yeah.
That I was telling earlier also. As far as premium is concerned, wire rod, in wire rods we get a premium from our ingot around 10,000, and our conversion cost, if you see, is around I think 3,500 to 4,000 rupees. So additional benefit of around maybe 6,000 or 7,000 we get in wire rods as far as wire rod is concerned, depending on the quality and grade of the wire rods we are producing. As far as rolled product is concerned, rolled product we get a premium of around in between 30 to 35,000 extra premium. But of course, conversion cost is also there. So if we see margins, actual margins after conversion cost, it will come around maybe 5,000 to 10,000 in between, depending again on the what product we are talking about, sizes and all that. If you are going in the more lower sizes, 0.3 mm, 0.5 mm, the premium is on the higher side. But our productivity goes down. If you are producing on the thinner side, the productivity goes down and the volume comes down. We have to balance in that.
Yes, sir. We've also seen, competitors also trying to push more material in the domestic market. So is there enough demand to absorb that? So physical premiums can sustain at these levels?
Domestic market, what we are seeing in the consumption pattern of the aluminum in the domestic market, around 45 to 50% is going into the power sector. Now, the kind of infrastructure development, the kind of power lines, grid lines, and government thrust in the electrification is there. The demand will be there as far as power sector is concerned. Now, solar panels, lot of solar panels are there. Again, extrusion demand is there in solar panels. Lot of solar panels are coming. EVs, electric vehicles. Again, in EVs, lot of usage of aluminum being a lightweight replaced by the steel. So all these areas, infrastructure, other areas, infrastructure development also, lot of the demand in the domestic market is still there. Because we are seeing the domestic GDP growth is around maybe 5 to 6% growth GDP, which is projected. And aluminum, as far as whatever historically we see, aluminum requirement is around 1.5% of the GDP. It is almost there. It grows like that. So aluminum requirement will grow at the end of maybe 7 to 8% or 9%.
Yes, sir. Lastly, you mentioned that we incurred almost 75 crores in RPO obligations. So are we planning on putting up, captive solar, or maybe increasing the wind power capacity so that we don't have to purchase, we can reduce the external RPO purchase?
Yes, of course, we have to do that. We are going in for appointing a consultant in a very planned manner. Already 7 megawatt solar power is under our tendering stage. That will come within next 1 year or 1.5 years. But that is a small quantity. Wind power is an area where we have to see, or maybe setting up in hybrid mode, wind and solar both. We are exploring on that. Maybe our plan is by 2030, next 4 or 5 years, we will have to have more of at least 15 to 20% of green power into our portfolio.
Sir, can I supplement?
Yes, our director project will supplement.
This is a very good question, and going forward, everybody and we are working on it in different format, and very soon we'll have a fixed plan that how much green would be coming. And as our CMD Sahab has told, this 10 megawatt of solar will come in 1 year, but another 10 megawatt of our wind power will come in 1 or 2 months, because in Kaithar it is ready. Now it is getting clearances. In maybe from September or October, we'll be having 10 megawatt of additional plant. And we are working on a hybrid round the clock combination of solar, wind, and battery storage, and all we are working on with all the producers, power producers. And another 3-4 months time, we'll be fixing up our roadmap for the next few years.
Sure, sir. Also, sir, I mean, with the captive coal now at 4 million tons, is there any incremental cost savings that can come in, or most of the benefits are now already in the P&L?
Yes, definitely there is a saving, because what we are taking coal from MCL on full supply agreement and our own production, there is a difference of around 400 rupees we are getting advantages. And transportation cost also, because that our mines is very proximate to our CPP. So that advantage we are also getting. In the both way we are getting advantages in our in-house coal supply, that is from our own mines. Okay.
Okay, sir. Thank you.
Thank you. I'll take the next question from Manav Bhogia. Please go ahead.
Yes. Hi. Very good morning, and thank you for the opportunity.
Morning. Good morning.
Sir, you had mentioned the cost of production of alumina at 20 to 21,000 rupees per ton. Can you provide the same for the aluminium segment as well?
Aluminium, our cost is around 150,
155 to 160. It is varying within that range only. The aluminium product, because that it depends upon our product basket. I am talking about the average cost of metal. The more we go for rolled product, the cost may vary. But the range is within 155 to 160.
150,000.
155,000.
150,000.
Sure, sir. Got it. So one question, if you could provide the number for the landed cost of the caustic soda for the quarter.
Last quarter का कितना था landed देखिए? I think it was
41,000 something. No?
Caustic soda landed cost was
44,000 something.
44,000 plus. It has increased slightly. It has increased from the previous quarter. No?
41,000.
44,000.
41,000. इसमें प्राइस ये तो है इसमें
You see the landed cost of caustic soda in, if you see quarter 1 24-25 it was 36,300. This quarter this year 25-26 it is 44,301. So it has increased if you compare Q1 last year. If we compare Q4 last quarter, say if we compare, then that cost has gone Q4 से अगर compare करें हम
Q4 से 41 था Q4 से 41 था सर
Q4 से it is slightly increased.
I think 3,080 41 average cost.
Q4 Q1 sir.
Q4
Against 41,290.
41.
Now it is 44.
It's 3,000.
that is also increased. So it is increases there.
Sure, sir.
44,000 is the price which we are getting now.
Got it, sir. Got it. Thank you so much. That's all from my end, and all the very best.
Thank you.
Thank you. We'll take the next question from Shrikant Hemant. Please go ahead.
Yeah, thanks again for the opportunity. 3 more questions from my side. So first is, what is our total coal requirement and how much of this still needs to be purchased externally?
Total coal requirement is around 7.2 million ton. So will be producing around 4 from our internal and 3 to 3.2 will be taking from Coal India. NCL.
Understood. Very helpful. Second is regarding our bauxite mines. So when do the leases for the existing mines expire?
बताइए. Our director production is there.
Basically, presently we are operating 2 mines. and the present validity is in 29 and 31. And we will initiate process for renewal also. So this is the situation.
Understood. And the last question is regarding long-term alumina contracts. So is it safe to assume that roughly 75% of alumina exports would be on spot and rest would be on long-term contracts? Is that understanding correct?
I think long term will be on the lesser side because we had done one long term tender. We did not get sufficient of price was not very good. So as of now, we are aiming to go more on the spot. Maybe it will somewhere around 80% spot and 20 long term.
This was very helpful. That's all from my side. Thank you.
Thank you.
Sir?
So a couple of questions from my side as well. So regarding the brownfield aluminium project where you said the DPR is currently ongoing, so have we identified a new technology partner since there were certain challenges in the previous with the previous partner?
Yeah, the new technology supplier, we have already finalized it, and in another 3-4 months, last time I told the same thing, in 3-4 months time, we'll onboard the new technology supplier.
So the DPR preparation, since you said it's ongoing, so that would be basis finalization of the technology supplier, right? Or is it something which happens after the technology supplier is identified?
I didn't get your question. Can you come again, please?
DPR preparation.
So in the opening remarks, I mentioned.
See, DPR preparation, this technology supplier's input is required. So by the time we are fixing up who will be preparing our DPR, this technology suppliers would be finalized and they'll be onboarded it. We have almost finalized the things. Now we are doing the formalities. Being a PSU, we have to go through a process, and very soon we'll be onboarding the technology supplier.
Understood. And so the next question was on the wind capacity that's commissioning that you said 10 megawatt. I mean, what platform are we looking at, and what is the rated capacity of these turbines? Are we looking at the latest turbines?
Yeah,
or are we looking
it was actually a very long project which went into NCLT, but this now 10 megawatts, 1.5 megawatt is the capacity of each turbine, and 6 such turbines would start producing it. So we'll be we are getting clearances, all those clearances from MNRE and state of Tamil Nadu. In this month, we'll finalize this, and then we'll start utilizing it. We'll see how is the best possibility of utilizing this.
Okay, understood. So I missed I think a participant asked this question. I missed that point. So could you just reiterate what is the export proportion of alumina sales? And do I stand correct in understanding that around 75 or 80% of your export sales are on the spot basis, right?
You want to know the volume of export sales as compared to domestic, no?
Yes, alumina.
If we see this year, what I was telling, every month, maybe 4 shipment we are doing export. So that comes to around 1,20,000. In between, some month we are doing 4 shipments, some month 5 shipment also. Average 120. And domestic sale will be around monthly. If we see monthly domestic sale will be around in 20,000, in between 20 to 25,000. Maximum 20,000. So that will be around maybe 15 to 20% of 15% of the total volume will be going into domestic market.
Understood. And like 70-80% of the export would be on spot basis.
Yes.
80% on spot basis.
Yes, spot. 80% is spot. Maybe 20% will be going on long-term contract.
Okay, so that's it from my side. If I don't, I think we are done from all the participant questions as well. So I hand over to you, to the management for any closing remarks. Then we can conclude the call.
Thank you, ma'am. And thank you all our esteemed participants, analysts, and our institutional investors for reposing confidence on NALCO time and again, and coming in such a huge number with so many of questions, giving insight to our production, our marketing activity. It's also about expansion, diversification activities. And we hope and expect the same kind of cooperation in future also. And I just hand over the mic to our CMD sir, just to close the investor call.
Once again, on behalf of everyone present here, all our directors, I would like to thank all the investors, analysts, and everyone connected through VC for going through NALCO result and being in giving confidence in NALCO. Whatever your queries, I hope we have explained them well. One thing which I would like to tell on behalf of our board, that as far as NALCO is concerned, NALCO performance, we are trying to increase the volumes. We are trying to improve our techno-economics. As far as market is concerned, every time market is not in our hand, the prices, the demands are not in our hand. What is in our hand is to increase the volume, maximize the production, and increase the techno so as to reduce the cost. That already we have taken very challenging target this year as compared to previous year. We have taken at least maybe 10% higher targets in all the areas, and as far as first quarter is concerned, we have achieved all those targets. We are very much sure we will be achieving those targets. So at the end of the year, the financials will be very good. What advantage we have? We have both upward and downward integration. Upward integration may we have our own bauxite mines where we are getting very good quality bauxite, sufficient quantity of bauxite. Now we are having our own coal mines from where we at least maybe 60% of coal we are getting, which is again giving advantage to us. We are having JV with GNAL for having caustic soda. That is again giving a security as far as caustic soda is concerned. Our power plant, as far as power security is concerned, that is our own captive power plant where we produce the power at the rate of maybe 3 to 3.5 or 3.10 rupees per unit. That again is giving advantage to us. So a lot of advantages as far as our total integration is concerned. Now we are going in for expansion mode. The refinery will come next year. Our target now is to expedite the expansion of smelter along with the power plant. That we are aiming to next 3 to 4 years it should come, so that whatever alumina we are producing, excess of alumina should be converted to aluminium. So after that, only this overall turnover of the company will go above 25,000 to become a Maharatna company. That is our target. And with all the things going, we are hoping that whatever we are planning, we will be able to do it. So thank you once again in having confidence in NALCO and sharing all your experiences with us. Thank you. Thank you very much.
Thank you, sir. Thank you for hosting the call, and thank you all the participants for joining in. We now conclude the call.
Okay, well, thank you. With this, we come to an end of this session. Thank you all.